The New York Stock Exchange, sometimes known as the Big Board, is a stock exchange located at 11 Wall Street, Lower Manhattan, New York City, New York, United States. It is by far the world's largest stock exchange by market capitalization of its listed companies at $16.613 a trillion as of May 2013. Average daily trading value was approximately $169 a billion in 2013. The New York Stock Exchange trading floor is located at 11 Wall Street and is composed of 4 rooms used for the facilitation of trading. A fifth trading room, located at 30 Broad Street, was closed in February 2007. The main building, located at 18 Broad Street, between the corners of Wall Street and Exchange Place, was designated a National Historic Landmark in 1978, as was the 11 Wall Street building. The New York Stock Exchange is owned by Intercontinental Exchange. Previously, it was part of New York Stock Exchange Euronext, which was formed by the New York Stock Exchange's 2007 merger with the fully electronic stock exchange Euronext. New York Stock Exchange and Euronext now operate as divisions of Intercontinental Exchange. The New York Stock Exchange has been the subject of several lawsuits regarding fraud or breach of duty and was sued by its former CEO for breach of contract and defamation. History. The Stock Exchange Luncheon Club was situated on the 7th floor from 1898 until its closure in 2006. The New York Stock Exchange announced its plans to merge with Archipelago on April 21, 2005, in a deal intended to reorganize the New York Stock Exchange as a publicly traded company. New York Stock Exchange's governing board voted to merge with rival Archipelago on December 6, 2005, and become a for-profit, public company. It began trading under the name New York Stock Exchange Group on March 8, 2006. A little over 1 year later, on April 4, 2007, the New York Stock Exchange Group completed its merger with Euronext, the European combined stock market, thus forming the New York Stock Exchange Euronext, the first transatlantic stock exchange. Wall Street is the leading U.S. money center for international financial activities and the foremost U.S. location for the conduct of wholesale financial services. It comprises a matrix of wholesale financial sectors, financial markets, financial institutions, and financial industry firms. The principal sectors are securities industry, commercial banking, asset management, and insurance. Presently, Marsh Carter is chairman of the New York Stock Exchange, having succeeded John S. Reed, and the CEO is Duncan Niederauer, having succeeded John Thane. Notable events. The exchange was closed shortly after the beginning of World War I, but it partially reopened on November 28 of that year in order to help the war effort by trading bonds, and completely reopened for stock trading in mid-December. On September 16, 1920, a bomb exploded on Wall Street outside the New York Stock Exchange building, killing 33 people and injuring more than 400. The perpetrators were never found. The New York Stock Exchange building and some buildings nearby, such as the J.P. Morgan building, still have marks on their 4-section adders caused by the bombing. The Black Thursday crash of the exchange on October 24, 1929, and the sell-off panic which started on Black Tuesday, October 29, are often blamed for precipitating the Great Depression. In an effort to try to restore investor confidence, the exchange unveiled a 15-point program aimed to upgrade protection for the investing public on October 31, 1938. On October 1, 1934, the exchange was registered as a national securities exchange with the U.S. Securities and Exchange Commission, with a president and a 33-member board. On February 18, 1971, the non-profit corporation was formed, and the number of board members was reduced to 25. One of Abbie Hoffman's well-known publicity stunts took place in 1967, when he led members of the Yippie movement to the exchange's gallery. The provocateurs held fistfuls of real dollars mixed with fake dollars toward the trading floor below. Some traders booed, and some collected the apparent bounty. The press was quick to respond and, by evening, the event had been reported around the world. Hoffman wrote a decade later, We did a Euro unregistered trademark T called a press. At that time we really had no notion of anything called a media event. On October 19, 1987, the Dow Jones Industrial Average dropped 508 points, a 22.6% loss in a single day, the second biggest one-day drop the exchange had experienced. Black Monday was followed by Terrible Tuesday, a day in which the exchange's systems did not perform well and some people had difficulty completing their trades. Subsequently, there was another major drop for the Dow on October 13, 1989. The mini crash of 1989. The crash was apparently caused by a reaction to a news story of a $6.75 billion leveraged buyout deal for UAL Corporation, the parent company of United Airlines, which broke down. When the UAL deal fell through, it helped trigger the collapse of the junk bond market, causing the Dow to fall 190.58 points, or 6.91%. Similarly, there was a panic in the financial world during the year of 1997. The Asian financial crisis. Like the fall of many foreign markets, the Dow suffered a 7.18% drop in value on October 27, 1997, in what later became known as the 1997 mini-crash, but from which the DJIA recovered quickly. This was the first time that the circuit breaker rule had operated. On January 26, 2000, an altercation during filming of the music video for Sleep Now in the Fire, which was directed by Michael Moore, caused the doors of the exchange to be closed and the band Rage Against the Machine to be escorted from the site by security after band members attempted to gain entry into the exchange. Trading on the exchange floor, however, continued uninterrupted. In the aftermath of the September 11, 2001 terrorist attacks, the New York Stock Exchange was closed for 4 trading sessions, one of the longest times the New York Stock Exchange was closed for more than one session. Only the third time since March 1933. On May 6, 2010, the Dow Jones Industrial Average posted its largest intraday percentage drop since the October 19, 1987 crash, with a 998-point loss later being called the 2010 flash crash. The SEC and CFTC published a report on the event, although it did not come to a conclusion as to the cause. The regulators found no evidence that the fall was caused by erroneous orders. On October 29, 2012, the stock exchange was shut down for 2 days due to Hurricane Sandy. The last time the stock exchange was closed due to weather for a full 2 days was on March 12 and 13 in 1888. On May 1, 2014, the stock exchange was fined $4.5 million to settle charges it violated market rules, the Securities and Exchange Commission said Thursday. Trading. The New York Stock Exchange provides a means for buyers and sellers to trade shares of stock in companies registered for public trading. The New York Stock Exchange is open for trading Monday through Friday from 9:30 a.m. Euro 4:00 p.m. ET, with the exception of holidays declared by the exchange in advance. The New York Stock Exchange trades in a continuous auction format, where traders can execute stock transactions on behalf of investors. They will gather around the appropriate post where a specialist broker, who is employed by a New York Stock Exchange member firm, acts as an auctioneer in an open outcry auction market environment to bring buyers and sellers together and to manage the actual auction. They do on occasion facilitate the trades by committing their own capital and as a matter of course disseminate information to the crowd that helps to bring buyers and sellers together. The auction process moved toward automation in 1995 through the use of wireless handheld computers. The system enabled traders to receive and execute orders electronically via wireless transmission. On September 25, 1995, New York Stock Exchange member Michael Ineson, who designed and developed this system, executed 1,000 shares of IBM through this HHC, ending a 203-year process of paper transactions and ushering in an era of automated trading. As of January 24, 2007, all New York Stock Exchange stocks can be traded via its electronic hybrid market. Customers can now send orders for immediate electronic execution, or route orders to the floor for trade in the auction market. In the first 3 months of 2007, in excess of 82% of all order volume was delivered to the floor electronically. New York Stock Exchange works with U.S. regulators like the SEC and CFTC to coordinate risk management measures in the electronic trading environment through the implementation of mechanisms like circuit breakers and liquidity replenishment points. Until 2005, the right to directly trade shares on the exchange was conferred upon owners of the 1366 seats. The term comes from the fact that up until the 1870s New York Stock Exchange members sat in chairs to trade. In 1868, the number of seats was fixed at 533, and this number was increased several times over the years. In 1953, the number of seats was set at 1,366. These seats were a sought-after commodity as they conferred the ability to directly trade stock on the New York Stock Exchange, and seat holders were commonly referred to as members of the New York Stock Exchange. The Barnes family is the only known lineage to have 5 generations of New York Stock Exchange members: Winthrop H. Barnes, Richard W. P. Barnes, Richard S. Barnes, Robert H. Barnes, Derek J. Barnes. Seat prices varied widely over the years, generally falling during recessions and rising during economic expansions. The most expensive inflation-adjusted seat was sold in 1929 for $625,000, which, today, would be over $6 million. In recent times, seats have sold for as high as $4 a million in the late 1990s and as low as $1 a million in 2001. In 2005, seat prices shot up to $3.25 a million as the exchange entered into an agreement to merge with Archipelago and become a for-profit, publicly traded company. Seat owners received $500,000 in cash per seat and 77,000 shares of the newly formed corporation. The New York Stock Exchange now sells one-year licenses to trade directly on the exchange. Licenses for floor trading are available for $40,000 and a license for bond trading is available for as little as $1,000 as of 2010. Neither are resellable, but may be transferable during the change of ownership of a corporation holding a trading license. New York Stock Exchange Composite Index. In the mid-1960s, the New York Stock Exchange Composite Index was created, with a base value of 50 points equal to the 1965 yearly close. This was done to reflect the value of all stocks trading at the exchange instead of just the 30 stocks included in the Dow Jones Industrial Average. To raise the profile of the composite index, in 2003 the New York Stock Exchange set its new base value of 5,000 points equal to the 2002 yearly close. Its close at the end of 2013 was 10,400.32. Timeline. In 1792, New York Stock Exchange acquires its first traded securities. In 1817, the Constitution of the New York Stock and Exchange Board is adopted. In 1867, the first stock ticker. In 1896, DJIA first published in the Wall Street Journal. In 1903, New York Stock Exchange moves into new quarters at 18 Broad Street. In 1906, DJIA exceeds 100 on January 12. In 1907, Panic of 1907. In 1914, World War I causes the longest exchange shutdown, 4 months, 2 weeks. Reopening December 12 brings the largest one-day percentage drop in the DJIA. In 1915, market price is given in dollars. In 1929, central quote system established. Black Thursday, October 24 and Black Tuesday, October 29 signal the end of the Roaring Twenties bull market. In 1943, trading floor is open to women. In 1949, longest bull market begins. In 1954, DJIA surpasses its 1929 peak in inflation-adjusted dollars. In 1956, DJIA closes above 500 for the first time on March 12. In 1966, New York Stock Exchange begins a composite index of all listed common stocks. This is referred to as the Common Stock Index, and is transmitted daily. The starting point of the index is 50. It is later renamed the New York Stock Exchange Composite Index. In 1967, Muriel Siebert becomes the first female member of the New York Stock Exchange. In 1967, protesters led by Abby Hoffman throw mostly fake dollar bills at traders from Gallery, leading to the installation of bulletproof glass. In 1970, Securities Investor Protection Corporation established. In 1971, New York Stock Exchange recognized as not-for-profit organization. In 1972, DJIA closes above 1,000 for the first time on November 14. In 1977, foreign brokers are admitted to New York Stock Exchange. In 1980, New York Futures Exchange established. In 1982, longest bull markets in DJIA history begins. In 1987, Black Monday, October 19, sees the second largest one-day DJIA percentage drop in history. In 1991, DJIA exceeds 3,000. In 1995, DJIA exceeds 5,000. In 1996, real-time ticker introduced. In 1999, DJIA exceeds 10,000 on March 29. In 2000, DJIA peaks at 11,722.98 on January 14. First New York Stock Exchange Global Index is launched under the ticker NYID. In 2001, trading in fractions ends, replaced by decimals. September 11, 2001 attacks occur causing New York Stock Exchange to close for 4 sessions. In 2003, New York Stock Exchange Composite Index relaunched and value set equal to 5,000 points. In 2006, New York Stock Exchange and ARCA-X merge, creating New York Stock Exchange ARCA and forming the publicly owned, for-profit New York Stock Exchange Group, Incorporated. In turn, New York Stock Exchange Group merges with Euronext, creating the first transatlantic stock exchange group. DJIA tops 12,000 on October 19. In 2007, U.S. President George W. Bush shows up unannounced to the floor about an hour and a half before a Federal Open Market Committee interest rate decision on January 31. New York Stock Exchange announces its merger with the American Stock Exchange. New York Stock Exchange Composite closes above 10,000 on June 1. DJIA exceeds 14,000 on July 19 and closes at a peak of 14,164.53 on October 9. In 2008, DJIA loses more than 500 points on September 15 amid fears of bank failures, resulting in a permanent prohibition of naked short selling and a 3-week temporary ban on all short selling of financial stocks. In spite of this, record volatility continues for the next 2 months, culminating at 5.5-year market lows. In 2009, DJIA closes at 6,547.05 on March 9, reaching a 12-year low. DJIA returns to 10,015.86 on October 14. In 2013, DJIA closes above 2007 highs on March 5. DJIA closes above 16,500 to end the year. Merger, acquisition, and control. On February 15, 2011, New York Stock Exchange and Deutsche Bar Paragraph RSE announced their merger to form a new company, as yet unnamed, wherein Deutsche Bar Paragraph RSE shareholders will have 60% ownership of the new entity, and New York Stock Exchange Euronext shareholders will have 40%. On February 1, 2012, the European Commission blocked the merger of New York Stock Exchange with Deutsche Bar Paragraph RSE, after Commissioner Joaquin Almunia stated that the merger would have led to a near monopoly in European financial derivatives worldwide. Instead, Deutsche Bar Paragraph RSE and New York Stock Exchange will have to sell either their Eurex derivatives or LIFFE shares in order to not create a monopoly. On February 2, 2012, New York Stock Exchange Euronext and Deutsche Bar Paragraph RSE agreed to scrap the merger. In April 2011, Intercontinental Exchange, an American futures exchange, and Nasdaq OMX Group had together made an unsolicited proposal to buy the New York Stock Exchange Euronext for approximately $11 billion, a deal in which Nasdaq would have taken control of the stock exchanges. New York Stock Exchange Euronext rejected this offer twice, but it was finally terminated after the United States Department of Justice indicated their intention to block the deal due to antitrust concerns. In December 2012, it was announced that ICE had proposed to buy the New York Stock Exchange Euronext in a stock swap with a valuation of $8 billion. New York Stock Exchange Euronext shareholders would receive either $33.12 in cash, or $11.27 in cash and approximately a sixth of a share of ICE. The chairman and CEO of ICE, Jeffrey Sprecher, will retain those positions, but 4 members of the New York Stock Exchange Board of Directors will be added to the ICE board. Opening and closing bells. The New York Stock Exchange's opening and closing bells mark the beginning and the end of each trading day. The opening bell is rung at 9:30 a.m. Eastern Time to mark the start of the day's trading session. At 4 p.m. Eastern Time the closing bell is rung and trading for the day stops. There are bells located in each of the 4 main sections of the New York Stock Exchange that all ring at the same time once a button is pressed. There are 3 buttons that control the bells, located on the control panel behind the podium which overlooks the trading floor. The main bell, which is rung at the beginning and end of the trading day, is controlled by a green button. The second button, colored orange, activates a single-stroke bell that is used to signal a moment of silence. A third, red button controls a backup bell which is used in case the main bell fails to ring. History: the signal to start and stop trading wasn't always a bell. The original signal was a gavel, but during the late 1800s, the New York Stock Exchange decided to switch the gavel for a gong to signal the day's beginning and end. After the New York Stock Exchange changed to its present location at 18 Broad Street in 1903, the gong was switched to the bell format that we see today. A common sight today is the highly publicized events in which a celebrity or executive from a corporation stands behind the New York Stock Exchange podium and pushes the button that signals the bells to ring. Many consider the act of ringing the bells to be quite an honor and a symbol of a lifetime of achievement. Furthermore, due to the amount of coverage that the opening-closing bells receive, many companies coordinate new product launches and other marketing-related events to start on the same day as when the company's representatives ring the bell. This daily tradition wasn't always this highly publicized either. In fact, it was only in 1995 that the New York Stock Exchange began having special guests ring the bells on a regular basis. Prior to that, ringing the bells was usually the responsibility of the exchange's floor managers. Notable bell ringers: many of the people who ring the bell are business executives whose companies trade on the exchange. However, there have also been many famous people from outside the world of business that have rung the bell. Athletes such as Joe DiMaggio of the New York Yankees and Olympic swimming champion Michael Phelps, entertainers such as rapper Snoop Dogg and members of the band Kiss, and politicians such as Mayor of New York City Rudy Giuliani and President of South Africa Nelson Mandela have all had the honor of ringing the bell. 2 United Nations Secretary-Generals have also rung the bell. On April 27, 2006, Secretary-General Kofi Annan rang the opening bell to launch the United Nations Principles for Responsible Investment. On July 24, 2013, Secretary-General Ban Ki-moon rang the closing bell to celebrate the New York Stock Exchange joining the United Nations Sustainable Stock Exchanges Initiative. In addition, there have been many bell ringers who are famous for heroic deeds, such as members of the New York Police and Fire Departments following the events of 9/11, members of the United States Armed Forces serving overseas, and participants in various charitable organizations. The reception they receive is often significantly more vocal than that accorded to even the most famous celebrities. There have also been several fictional characters that have rung the bell, including Mickey Mouse, the Pink Panther, Mr. Potato Head, the Affleck Duck, and Darth Vader. See also: Economy of New York City, List of American exchanges, List of Presidents of the New York Stock Exchange, U.S. Securities and Exchange Commission, List of market opening times, references, notes. Bibliography: Buck, James E. The New York Stock Exchange, The First 200 Years. Greenwich Pub. Group. ISBN A0-944641-02-4, GEISST, Charles A. Wall Street, A History Euro from its beginnings to the fall of Enron. Oxford University Press. ISBN A0-19-517060-1, Kent, Zachary. The Story of the New York Stock Exchange. Scholastic Library Pub. ISBN A0-516-04748-5, Sloan, Leonard. The Anatomy of the Floor. Doubleday. ISBN A0-385-12249-7, Sobel, Robert. NYSE A History of the New York Stock Exchange, 1935–1975. Waybright and Talley. ISBN A0-679-40124-5, External links, Official website, Website on trading and listing on the New York Stock Exchange, List of planned and unplanned historical closings, New York Stock Exchange collected news and commentary at the New York Times.